Hello, everyone. It's 8:02 a.m. Chicago time on the 25th of January, 2018. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're seeing green across the board, or in my quote board's case, it's blue versus red. Crude oil leading the pack, up 1.2%. Crude popped yesterday on inventories and just did not look back, trading 66.41 on the March contract, H8 or H18. The euro is stronger this morning at 125.69. Remember when the euro was at 108? Remember today the ECB announced its rate decision, and Draghi still in his conference call that started about a half hour ago. So expecting influence there. The NASDAQ, Russell, Dow, and the S&P are all up. The S&P is opening in an 11-point gap again. 10 to 11-point gaps have been fairly standard. Again, yesterday we dropped and we popped right up. We saw a very embattled attempt to hold the product down, offers getting smashed on the way up. The market, the ES made it all the way back up to the prior day's high before the close. We'll look at that in a moment. It closed in balance and now it's trading a little bit higher. Yesterday's range was wider than normal in the ES. The bonds are slightly up. The 10-year notes are slightly down. The Bund is down. Euro Stocks 50 and the DAX are both down. As far as what we're expecting going forward today, what's on the calendar, we have 10 o'clock Eastern, 9 Central, U.S. leading index for December, 0.5 expected, 0.4 prior. New home sales also at 10. Expecting 675,000 units versus 733,000. This number represents December. Then we get natural gas, which isn't really a mover for us at least. And Kansas City Fed manufacturing, also not a mover. As far as speakers, again, Draghi is in his conference call currently on the ECB announcement. So that's where we are. Let's look at where we were yesterday before the open. Need to remember to change the screen from review to actual. Okay. So the market was shaping up for a gap yesterday. 28.47, 47.50 was the opening location during the trader bite, and the expectation was for the market to pull back a little bit, get responsive towards the prior day's profile. Expected it to fight its way down to the prior high at 44.75, down into 42.43 before the bounce. The trade I set up yesterday, the primary trade of the day I set up yesterday, was to look for support. I showed it in the video. Now remember what this looks like right here. A sideways open, which is exactly what we got. A small drop into value high, which we didn't get. We got a much smaller drop. It didn't attempt into the prior range at all. Consolidate, push up. That's what we're looking for. And here's what we got. Now, yesterday on a 2-tick Renko was very busy. That's a good sign. When my 2-tick Renko is scrolling off the screen, quickly, that spells opportunity in my opinion. So there we are. We see this sideways open right here. Completely sideways open, just like I drew. This is very predictable, nothing magical there. And then we get the drop, and then we didn't quite get to the prior day's high at 28.44.75. We stopped 3 ticks short at 45.50, and then we get the impulse up. Okay, that's the impulse that we talk about right here. That's that impulse. Okay, and we push with that impulse. Very classic. High flag, continuation, and then the expectation here is that it would consolidate for quite a while and start to drift up. What it did is it pushed through the IB high, extending the range up, and then failing. Once we saw this, two things come into play. Door number 2, door number 3. Door number 1's already open, and we could see what's there. So where's the prize? Behind 2 or 3, right? So once we see that, we have the likelihood that we're going balanced. So we start to trade from the outside in. In fact, trading from the outside in came in earlier, and we start to look for it to drift back and forth, back and forth, back and forth, or we get a continuation on the impulse. Okay, I did not expect another 9.5 point drop. That was interesting. So now, as soon as it gets back into the prior day's range, what are we looking for? Value high. If it does not hold value high, which this didn't, then we're looking for point of control. If it lingers at the point of control, we're looking for value low as the next target. So you hold tight to your shorts in that case. And this ended up pushing through to within a couple ticks of the prior day's low. It tested all the way down to the prior day's low. So as we push forward here, let's make this. Oh, but yeah, it pushed all the way through to the prior day's low. And then the bounce was pretty strong. We ended up with a couple of pretty good impulses on the way up. Held the IB from below. And finished in balance, believe it or not. After that big drop, we finished in balance. How do I know it finished in balance? It finished on the point of control, right here, this pink line, which had the mid right there, the blue line, and VWAP on top of each other. That's balance. Okay, so that's the review of yesterday. We ended up just going back to balancing right on top of the prior day. Okay, so if we look at the prior day, here's another little clue for you. Where was the point of control on Tuesday? Point of control on Tuesday was at 28.40.50. Where is the point of control on Wednesday, yesterday? 28.40 and a quarter. Point of control overlap in this area. So if we look at where we are here, that's pretty bad. Oh, that's nice. So this box here represents the point of control that's overlapping. So what this market has done essentially is it has rallied, it has consolidated, it has pushed higher, failed, came all the way back down, and then is consolidating as in balance. So it has tested above, it has tested below, and now it's consolidating. So today, coming into today, we have a rejection of yesterday. Everybody under the sun is going to expect that this is likely to just blow up from here. My expectation is, well, let's look at the overnight first. Continue with our review. Sorry, I'm a little slow this morning. Got a lot on my screen, but not a lot on my mind. Trend up into the overnight session. The overnight volume is almost double what we would expect. Okay, so this is pretty serious. A multi-distribution profile. So the overnight session was spent in price discovery. There was no consensus in the overnight session. So we're likely to have a relatively active opening session. We're near highs here. We keep pushing near highs. We just had a nice burst. Look at this book map. Look at that. Just sideways, 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 sideways. And boing, real quick. All these offers cancel real quick. These are spoof offers, except for this one at 55. That one's pretty, looks like they're pretty serious. And then we're drifting off currently. So my point with this is, given where we are, given what we've got here, is we'll have a relatively active open. I'm expecting we are out of range, in range, out of value. However, I am expecting this to be an outside-in day fairly quickly, unless news comes in, and it's not expected. We've averted the government shutdown crisis nonsense for 2.5 more weeks before we have to deal with that again. I don't see anything else looming. To me, this is likely to continue the move up into that we have overnight, push through into 28, looks like up to 28.57 currently based on bookmap, potentially. And then I'm looking for outside in trading. Okay, outside in trading, I'm looking for this to balance back in. So I'm looking ultimately at a small distribution up top, large distribution in the middle, small distribution at the bottom. No, I'm not trying to give you the finger with that graph. That's just how I expect the profile to look at the end of the day. Why am I doing that? I'm doing that so that I can visualize where the market might be by the end of the day, so that whatever actions I take, when the market opens, align with how things are expected to look by the end of the day. But I don't hold on to just one image. I create multiple scenarios. This is very important. I was asked on via direct message on Twitter by someone, do you use some sort of what do they say? Some sort of psychic exercises or remote viewing? And I think what they meant is visualization. Am I visualizing the trades? And that's exactly what we're doing here. There's no point in creating the scenarios on a daily basis other than to visualize what will happen, what's likely to happen, or what could happen, so that when it's time to act, we're acting having seen this before, kind of like the way the military does. Okay, so that's what I've got now. Looking at the overnight, and somebody brought this up. Very good point. Check this out. It's not rollover. The delta is negative. It's negative pretty good for the overnight. The delta is negative. It's a negative 5,000 contracts. The inventory is long, but the delta is negative. So what you have here is a market that has moved up on very light volume within that session, not compared to the prior session, but it moved up on light volume on the way up. Same with yesterday's recovery. You have a negative delta continuing into the close. The delta was close to its most negative point on the close while this rise was happening. We're seeing some dissonance between price and the aggressors in here. This doesn't mean that the OTF is not present, that the OTF won't step in and absolutely put its boot up, you know what, for the sellers still, and it's likely to do so. It's done so very consistently. But these are important things to note, and contextually, it feeds into the primary scenario. Do you guys remember the primary scenario? Good. Well, it's in the video. You can always watch it. It's always there. Okay. Secondary scenarios, we get responsive right away. We're in range out of value. So I'm expecting a two-way fight. Remember, we had pretty good volume. We had a rally on selling divergence on the delta. I'm not a divergence trader, but it's an interesting thing for me to note. I'm expecting it to drift downwards before it finds a base. And then we get the push once we're deep enough, once we've advertised prices low enough, we get the push to start moving out. And again, I'm looking for 57 as the topper today, okay, as the cap. So scenario 2 simply drifts downwards as the inventory balances, and then eventually price is advertised low enough to suddenly get a pulse up and push higher. So that's where I stand on scenario number 2. Okay, and hopefully this is what my target. This is partially my target. What I'm looking for as far as a target, I'm looking for those offers to sit there. They've been sitting there for quite some time, since yesterday. I'm looking for the high to be taken out because the overnight high is tight up against where we are now. But I'm looking for these offers to slow things down. Again, this is barring news. Also, the impulse up we had just now is being taken back. Why? Because we pushed through the midpoint of the impulse, and we're getting back into the zipper that we had earlier before the initial claims release this morning at 7:30 Central, 8:30 Eastern. All times shown here are Chicago times. So that's what I have for you. Hopefully that's helpful to set you out on maybe verifying your plans or seeing if your plans are in alignment. There is no right or wrong here. There is no crystal ball. These are just plans. These are just, it's like, what is that quote from Mike Tyson? You know, everybody's got plans until they get punched in the face. And that's basically what we do. It's better to get punched in the face while you have somewhat of a plan than no plan at all. Good luck.